The market's been up 5 straight months in a row. This is a rare feat. What does that tell us? What does it signal about where the market's heading next? I've got that data and research, that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. If you flip a coin, there's a 50-50 chance of it being heads or tails. You know that, right? But if you flip heads 5 times in a row, what are the odds of the next flip being heads or tails? It's 50-50. I think it tricks us because, well, what are the odds of flipping 6 heads in a row? And that's obviously not 50-50. But that next coin flip is still 50-50. But the reason it's 50-50 is we know the more coin flips you make, at some point, if you've had a string of a lot of heads in a row, you'll have a string of a lot of tails in a row. And eventually, whether it's 100 flips or 1,000 flips or 10,000 flips, we'll get to 50-50. Those are the odds with flipping a coin. Well, does the same apply to the stock market? No, thankfully. No, it doesn't. Guys, this is one of my all-time favorite stats about the stock market is, take a look right here. How many days is the stock market positive? Well, about 56% of all days. That's pretty stinking close to a coin flip. But what about how many months are positive? Well, 63%. So odds have increased. What about how many years are positive? 75%. You've heard me say this lots of times. 3 out of every 4 years are positive in the stock market, and therefore work that to your advantage. All right. What about every 5 years? 88% of every 5 years are positive in the market. 95% of every 10 years are positive in the market. And by the way, guys, this goes back to before the Great Depression. If you move it to after the Great Depression, I believe that's close to 98% of all 10-year time periods. All 20-year time periods going back for about the last 100 years are positive in the stock market. So the more you are invested, the better chance of that law of large numbers kind of working out in your favor. It is not a coin flip. The more flips you take, the better your odds are. Well, the past 5 months, I'm recording this in early April, the past 5 months have been an incredible run in the market. All 5 positive. We've got, I hate using this winning or losing or runs or whatever. It sounds like gambling, and it is not. This is investing. It's very different. But 5 months in a row, the stock market's been positive. November of 2023, December of 2023, and then January, February, March to start this year. Now, if the stock market's been up 5 months in a row, does that mean the pendulum is about to swing? And that, well, we've had this string of 5 straight months positive. At some point, we're going to have a string of several months where it's negative. Well, I already proved that wrong with the coin flip and with the odds of what history has told us about how long the time period, your investment holding time period, and what that means for the odds of the market being higher. But specifically, what does the market say? What does history say about time periods when the stock market's been positive 5 straight months in a row? Well, we know that what's going to drive the stock market in the 6th month and 7th and 8th, by the way, is going to be inflation and Fed policy. And that's going to be the primary factor. Talk about that all the time. Ancillary factors are going to be overall economic data, economic news, company profits, that sort of thing. And then kind of the underpinning of all of that, or overshadowing all of that, is the political strife and all the challenges and finger pointing and all of that, the politics of an election year. But setting all of those factors aside, what's history tell us about what happens after a 5-month winning streak in the stock market? Since 1950, there have been 30 different 5-month winning streaks in the S&P 500. And again, what I mean by 5-month winning streaks is that each of the months were positive 5 months in a row. Not that the stock market was positive over a 5-month time period. That happens all the time. But where each of those individual months were positive 5 consecutive in a row. There have been 30 of these going back to 1950 and including the most recent one. So of the most recent 28, 26 of those were positive 1 year later. 26 out of the most recent 28 we're positive 1 year later in the stock market. This very clearly suggests that history, not trying to predict what's going to happen with inflation, Fed policy, and political challenges and the election this year, not thinking about any of that. Just looking at history, history says, no, a 5-month winning streak in the S&P 500 actually signals optimism and maybe cautious optimism, but optimism nonetheless about the stock market. And here's where I can say, not that you need to ignore inflation, ignore Fed policy, and ignore the potential financial impact of the election, but listen, in those previous 28 time periods, they were dealing with very similar issues. Government debt, yeah, that's been an issue. Border control, that's been an issue. Election stuff, that's been an issue. Inflation, that's been an issue in these prior times. And yeah, it could be different, or it's certainly unique right now. But there were those worries and concerns back then, and yet very clearly, 26 out of the most recent 28 of these time periods, the market was positive 1 year later, and not just positive, on average, up 12.5%. That surpasses the average annual rate of return that the stock market provides over a long period of time. 5 straight months the stock market's been positive. That is rare, only happening 30 times in rolling time periods, 30 times over the past 80 some years. But it clearly signals that this shouldn't mean, well, we're inevitably going to see a pullback, so watch out, I better be cautious. One other thing that I'd point out here, saw this chart recently about a warning for, well, the stock market's had a really good run, let me pull back. Or the stock market's had a really good run and we've got all these challenges, let me pull back, let me shift into cash. This shows just since 1995, so the past 30 years, let's call it, what the return has been for the S&P 500 index, and hopefully you are more diversified than just the S&P 500, just large cap stocks, and the purchasing power of a dollar. So this is basically inflation adjusted stock market return. So stock market return minus inflation each of those years versus a dollar minus inflation. And so this isn't, you would also argue these include the 2 worst time periods to invest since the Great Depression, tech bubble, great financial crisis, and the steepest decline and fastest, quickest bear market we've ever had in the COVID recession, COVID shutdown. And so this is not a normal 30-year time period, and yet the benefits of staying invested have been astounding compared to staying in cash. So short-term stock market returns have been fantastic. I hope and trust that you've stayed invested in a prudent long-term investment strategy that's connected to your financial plan and what you need those dollars to achieve for you, what goals you're trying to achieve. Work with your certified financial planner to make sure that investment strategy is honed. For us, we use a multi-strategy approach to add diversification on top of diversification. It helps lower risk while also helping to ensure that you're capturing upsides and wins in the market like we're seeing right now. Also prepares you, though, for inevitable changes at some point, right? At some point, even though the data in this case overwhelmingly suggests still stay invested despite the challenges that may lie ahead. Work with your CFP on that. If you don't have a CFP on your team, we are here to help. You can call a CFP on my team. Give us a call, 574-247-5898. You can find us online, wisemoneyshow.com, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.